Nigeria's real estate sector, by segment and by city, where the land never sleeps and the returns rarely do. Nigeria's real estate market is a living, breathing arena where ambition, population growth, and rising city energy collide to create some of the most exciting investment stories on the continent. From fast expanding edges of Lagos to quiet but hungry secondary cities that reward early movers, the market is a mix of opportunity, unpredictability, and unmistakable African momentum. This is a landscape where timing matters, local knowledge pays, and bold investors can turn ordinary plots into powerful long-term wealth. Series Introduction. It's Friday the 19th of December, 2025. Welcome to the second edition of the Bourdilloncrest series. In our first series, we looked at why property remains the preferred investment class in Nigeria. In today's series, we do a deep dive into the real estate sector, by market segment, and across the 6 geopolitical zones of Nigeria. As you are visiting us for the first time, please subscribe, smash the like button, share this video, and help us grow our family. If you have already subscribed, then show your support by liking the video and making a comment. Now let's jump right back in. The big picture in plain terms. Nigeria's urban population and diaspora remittance flows, accelerating infrastructure projects, and renewed private capital have reshaped real estate demand, from speculative land banking on city edges to infrastructure-led estate development and rising demand for middle-income housing. Market leaders such as Lagos and Abuja remain anchors, but secondary and tertiary cities are where early-stage capital finds outsized returns. Evidence from recent market reports shows a stabilizing Lagos market, major national infrastructure funding, and rising investor interest in secondary cities.
Land banking, the patient game, with city edge upside. Land banking means buying titled land or hectares on the peri-urban fringe to hold until supply tightens or infrastructure arrives. It is high payoff when the right road, rail, or master plan lands nearby, and low effort if titles are clear. Ease of entry. Low cash entry points exist for plots in many secondary cities, but proper due diligence on title chains and planning risk is essential. Verified certificate of occupancy and registered survey plans reduce legal risk. Feasibility and yield expectations. Typical holding period is 2 to 5 years, with potential nominal capital appreciation from 30 to 100% or more in fast-growing corridors. Returns depend on proximity to announced infrastructure and regulatory clarity, where early buyers become future landlords in the 6 geopolitical zones. Northwest, Kano Corridor, outskirts of Kano, supported by improved rail and growing trade links. Northeast, despite security concerns, select expansion corridors in Bauchi and Gam where affordability and planned transport links make speculative parcels sensible, subject to security and due diligence. North Central, Kuj and outskirts of Abuja, and Lokoja where government and private projects drive appreciation. Southwest, Ibeju-Lekki, Lagos-Calabar Coastal Road Corridor and Mao, outside Lagos are the areas to watch as coastal, bus and rail transport infrastructure projects will lift land values. South-South, Uyo and outskirts of Port Harcourt, where port and energy-related expansions will increase land demand. Southeast, Enugu, Awka and outskirts of Onitsha, benefiting from regional economic growth and educational hubs.
Turning bare earth into bankable assets, build the infrastructure, capture the premium. This segment of the industry means delivering prepared, serviced plots and gated estates, or building roads and storm drainage to unlock a village to neighborhood ease of access. Returns combine land uplift and development margin. Ease of entry and feasibility. Barrier to entry is capital and delivery expertise, plus the need for approvals and utility connections. Partnering with local contractors and securing forward sales reduces risk. Typical returns. When well executed, IRRs of 20 to 35% are achievable on estate projects in growth corridors, and serviced plot premiums are often 20 to 60% above raw land value once infrastructure is in place. Public and private infrastructure financing flows have improved but remain constrained, which opens opportunities for private developers to capture the spread. Low-income housing, the backstory, the upside, and the payoff. Low-income housing is the largest unmet need, driven by urban informal settlements and wage affordability. It is demand-heavy and suits rental and mass purchase models. Ease of entry. Models include incremental core housing, rental flats, and collaboration with government subsidy programs or mortgage finance bots. Entry can be modular, starting with small blocks or cluster housing. Feasibility and returns. Feasibility improves with construction cost control, use of local materials, and rental management platforms. Gross rental yields in well-managed low-income projects can be 10 to 15%, with stable cash flow and strong social impact. Middle-income housing, the sweet spot, scale, and repeat demand. Middle income is the most investable commercial segment for developers because demand is large, buyers have some mortgage access, and projects can scale.
Ease of entry. Moderate capital, standardized product lines, and off-plan sales reduce working capital strain. Partnerships with mortgage providers and developer-friendly payment plans accelerate sales. Feasibility and returns. Developers typically target 25 to 45% margins on middle-income estates. Demand is strongest where there is steady white-collar employment, commuter links, and good schools. High-income housing, premium product, lower volume, higher margin. High-income housing targets wealthy professionals, senior executives, and returnee diaspora buyers. It trades on quality, amenities, and security. Ease of entry. Higher capital requirements and design standardization matter, but unit sizes are fewer and per-unit margins higher. Feasibility and returns. Capital appreciation is driven by scarcity and amenity quality. Rental yields are lower than mass rental, but capital gains remain strong in Lagos and Abuja. Expect higher margin per unit and longer sales cycles. From gilded roots to golden futures, the evolution of luxury, signature projects, status, and global money. Luxury real estate is concentrated and brand-driven. Diaspora buyers, multinationals, and wealthy locals anchor demand. Ease of entry and feasibility. High capital, high design standards, and a marketing push to high-net-worth buyers are required. Feasibility improves where international schools, hospitals, and secure logistics exist. ROI and market outlook. Capital gains in the luxury segment tend to outpace other segments in prime Lagos and Abuja micro-locations. The segment is cyclical but benefits from foreign inflows and corporate relocations. Recent market updates show continued luxury demand in Lagos and Abuja as HNWIs seek secure, modern housing.
City selection checklist. Do this before you buy. Verify title and chain of ownership. Request certificate of occupancy, registered survey plan, and/or other bona fide registered title. Confirm planned or funded infrastructure nearby, such as rail, highways, or ports. Reuters and Knight Frank reports show infrastructure announcements materially lift values. Check local demand drivers, work hubs, universities, and industry clusters. Use stage delivery and pre-sales to manage cash flow for development projects. For land banking, stress test exit assumptions around 3 and 5 years. Quick regional summary, 1 line per zone. Northwest, Kano and Kaduna deliver trade and rail-driven returns. Northeast, select state capitals are opportunistic when security and infrastructure allow. North Central, Abuja corridors are the safest large-scale play for land banking and serviced plots. Southwest, Lagos, Abeokuta, Ibadan, and Ibeja-Lekki corridors deliver across segments, from land banking to luxury. South-South, Port Harcourt and Uyo combine oil, port, and administrative demand for rental and high-end housing. Southeast, Enugu, Awka, and Onitsha present strong secondary city opportunities for middle and middle-up housing. Your money's next move. Final takeaways that matter. Match segment to city. Do not assume Lagos is the only source of outsized returns. Secondary cities offer better entry points and attractive yields. Land banking is high reward when anchored to credible infrastructure. Always validate public infrastructure funding and timelines. Middle-income housing is the most scalable commercial opportunity, with repeatable product lines and steady demand. Work with credible architects and construction partners for delivery, and secure forward sales or pre-finance to de-risk projects. Use detailed, location-specific due diligence and treat title verification as non-negotiable.
Conclusion: Nigeria's real estate market is not a single dance floor. It is a full festival with different rhythms across every region. The bold investor who reads the pulse of each city, times infrastructure shifts with discipline and matches the right product to the right demographic will not only secure strong returns, but will also ride ahead of the next wave of urban transformation. From the quiet heat of land banking to the polished shine of luxury towers, the opportunity is real, the landscape is wide open, and the smartest money is already moving. If you would like to know more, or wish to discuss brand sponsorship of any of our videos on estate agency, property development, construction and facilities management, please get in touch on any of the social media handles below. All our content is developed from real-life experiences in a professional and entrepreneurial journey that spans across 8 countries and 4 decades. Quote of the week: "Don't wait to buy real estate, buy real estate and wait." T. Harveker.
We are more than developers, we are dreamers, doers, and custodians of culture. Let's build homes that tell stories, communities that thrive, and legacies that last. Welcome to the Renaissance. Welcome to Bourdilloncrest Properties.